Hello and welcome to Anmut's webinar on data valuation. I'm your host, David Willens, the Chief Marketing Officer here at Anmut, and we are a data asset management company, which means that we make it possible for organisations to manage their data like any other business asset. And when they do that, the people who lead data get to play a more strategic and valued role in their organisation. And all that starts with data valuation. Right now, I'm going to hand you over to Herman Haynes, Anmut's co-founder and Chief Executive, to take you through data valuation, the key to more value creation. Herman, over to you.
Perfect. So on the first thing that we're going to do is just to talk about a few things. The first is why data valuation matters. And obviously, our company is about data asset management, and the most critical thing in data asset management is data valuation. You can't manage and prioritize assets if you don't know what the value of the asset is. So we're going to talk a little bit about that and to explain why we think it's so important. And then the second thing is we're going to, obviously it's a limited time, but we'll talk a little bit about how we do it and the logic behind it and so on and so forth. And then we'll talk about some client examples where they've used this to make a real difference to their business. And it's the really good thing about this is initially in 2018, when we started Anmut, there was a belief that this would be radical and groundbreaking. What's actually transpired 3 years later is it's really helped our clients gain an exponential value from data. So that's why we think it's so important and why we're sharing that with you today. And I'm going to share something which you would have seen me share several times before, but today there's a twist. It's an updated version. So this is the Ocean Tomo graph on intangible value. And you would have heard me talk about this many times, that in 1975, you could account for 83% of the value of the S&P 500 index by looking at the balance sheets of the companies. So in other words, if you added up the balance sheets of the companies, you would find that 83% of the value of the company is accounted for. And as we progress over time through every 5 years, 85, 95, 2005, 15, and up to now, what we have is a situation that only 10% of that value is on the balance sheet. In other words, 90% is what we call intangible value, things like brand value, things like data value, and so on. Now, why that's important is that virtually all of the management systems in organizations and virtually all of the metrics for investors are geared towards what we call short-term measures, the measures of the income statement and the balance sheet. And the problem is that it's not communicating the value of the data or the brand effectively in terms of the investment decision-making process. And what we're finding is organizations are floundering in terms of making the right investments in data. And therefore, they are falling further and further and further behind the organizations that are data-led. Now, the good news is being data-led is not black magic. There is science behind it. We know how to do it. However, only 3% of the companies in the world do it. So there is a really, really, really important thing to think through. Do you want to be part of the growing wave of companies that can use and manage data to create value? Or do you want to keep managing on the old style, how companies have been managed in 1975, and hope you can buck the trend? Now, I can't predict what the future brings. This curve might change radically and go back all the way down to 1975 levels. However, I'm not building my whole business on that hypothesis. So data is a new kind of asset. And these are things you've heard over and over and over again. It doesn't deplete with use. It increases with value. It increases when combined with other assets. And it's easily shared, copied, and combined when used. So understanding the pathways and the lineage of value is complicated, but it is doable. And therefore, we shouldn't underestimate the complexity of data valuation, because it is even harder to do data valuation than it is normal asset valuation. And unfortunately, since we've been really creating success with a number of clients on data valuation, there are organizations who think it's an easy job, just create a spreadsheet and you add up a few numbers, and we've seen some horrible examples of that. Data valuation is more complex than physical asset valuation because of the multitude of uses of data. Understanding it unlocks enormous value for the organization. As I said, exponential value. There is virtually no other asset that can give you the kind of exponential value that data does. And therefore, understanding the value properly is critical. And I'm going to just talk a little bit about accounting value. So one of the things that people often ask me is, if it's so valuable, why aren't we putting it on the balance sheet? Well, the simple truth is, since 1975, when the accounting profession has started to create international accounting standards, IFRS, as many of us know, the whole focus has been global standardization, but very little innovation in what accounting standards should be. And as we can see from the graph before, is that the accounting value has become fairly irrelevant. It is only 10% of the market value of the company. So therefore, even if we did put the accounting value on the balance sheet, it would be actually not very important. It won't really sway the decision making in any big way. So trying to go back to input-based accounting measures, which is what it's really based on, that apply principles of prudence, will give us the wrong answer. The value of data is best understood when we look at it from an outcome perspective. So let me say that again. The value of data is best understood when we look at it from an outcome perspective. If we look at it from an input perspective, we will still we will embed further the problems that we've created with climate change, and we'll further embed the problems that we've created with social disruption, because we're not investing in the right assets. Accounting has failed us. It won't change. It won't change fast, because the time frame for setting new accounting standards will be too late by the time we have the right accounting standards to deal with climate change and the social issues we have today. That is a fact. You could quote me on that. I've been asking the accounting profession for years to change. I'm a triple qualified accountant, so it doesn't make me happy to say this, but they've failed. And therefore we need a new model. And the new model is about looking at outcomes. We need to look at the impacts we have on society, and we need to look at the outcomes that businesses create for their different stakeholders, for the employees, for society, for the investor as well, and how it is all balanced. And that is the way forward. So let's go back to data and what has been going on. The industry has been spending billions and billions and billions of pounds, literally hundreds of billions of pounds every year on data investment. And every year for the last 10 years, and we did a similar survey when I led the practice at KPMG, CEOs think that data is very important. It's typically in the top 3 items that they would rate as important. But the major issue that's been super consistent since then is that the vast majority of those CEOs think that they only have a small percentage of the data in the condition they need the data. So in other words, if we look at customer data, in 2019, you'll see that 94% of CEOs think customer data is critical, but actually only 15% of those CEOs think they have the data they need. So an 80% gap between what they need and what they perceive to have. And this is true for all the other categories as well. The gap might be larger or smaller, but if you look at financials, it's a bit better for financials. Data about brand isn't very good. Data about risk is poor. Data about employees is poor, etc., etc. So it's very poor across the board. The one where there's actually a slight glimmer of hope is in supply chain. And one of the reasons that is the case is that supply chain has been shown as a concept. Remember, people used to think about supply chain as a factory when they started it all, but actually we understand supply chain is a concept. It's a value concept and a value construct. And equally, the thing that makes the supply chain work is data. So because of the progress in supply chain over the years, that's really driven that gap much closer to each other. But it's still not where it needs to be. We have massive issues globally around supply, ethics, and so on. That still needs to be breached. So let's be clear, we're not in great shape. All the hundreds of billions of investment in data is not leading to the outcomes that organizations need. And the reality is, when we did our survey last year, is that 91% of data's leaders say data is critical for success, but only 34% think that they manage data professionally. And it's bizarre if you think about it. If we think data is valuable and we know that it's critical for the success of the organization, why are we doing that? Well, the answer is actually quite obvious. If you look at what's going on in the data market, nearly all the discussions we get invited to are about either analytics or storage, and now cloud storage. And that's where 95% of the spend goes. If you care to look at government tenders, if you care to look at any kind of organizational procurement exercise around data, when they procure, they're actually buying analytics and storage. They want to understand a little bit better about customer. They want to know how to store the data. I mean, one of the big UK FTSE companies published recently that they're doing a massive exercise with Microsoft on Azure to create bigger storage platforms. Well, the funny thing is they did the same thing with Teradata, and before that they did the same thing with Oracle, and it's never solved the problem. Because the problem is not in the storage. The problem is understanding what data will create the most value for the organization, and secondly, ensuring it is fit for purpose. And unless we understand the value of data, we will not be able to take smarter decisions around that. So I'll repeat that. 95% of the investment is going into analytics and storage. Very little thinking or investment is going into ensuring we've got the right data for our organization and that the data is fit for purpose. And I'll use a real world example to try and explain what the issue is there. Imagine you were Shell, BP, or ExxonMobil, and you said, we really see a market for people buying our fuel. Fantastic. And what you're going to do then is to build lots of retail fuel stations, and you're going to build big tanks with tankers moving the fuel to the fuel stations. That's great. That's a downstream business, or not even a full downstream business. But if you didn't actually care about how you're going to get the data, what oil you need and where the oil is and how you're going to extract it, and secondly, how you ensure that oil is refined to a certain level of fitness, you've got a broken business model. You'll go bankrupt very quickly, and you know you'll be wasting vast amount of money. No integrated oil company works like that. But for some reason, we seem to think with data it can be different. We seem to be doing the sticking plaster thing day after day after day by saying we're going to focus on the analytics. It's the funky stuff, it's interesting, yes, but the data isn't there to do it. So data asset management and data valuation is critical because it helps us to really deliver the efficiency gains. There's been promises about data for years and years and years. And you know what McKinsey says? That only 6 to 30% of data projects are successful. So the reality is, even with all the analytics projects, it's not working. But much more important is to understand what stakeholder value outcomes you're going to create for your employees, for your investor, and so on and so forth. Understanding your data and managing it as asset has an incredible ability to lower the risk, but it goes hand in hand. It's not like the banking industry is currently trying to do, to manage the data risk on the one hand and trying to create efficiency on the other hand. This is one data asset that needs to be in a fit condition to manage the risk and to deliver the efficiency and stakeholder outcomes. And the funny thing is that once you start doing that, you actually get a significant rationalization of duplicate initiatives across the organization. Now, this is not over and above what you're already spending. The average organization spends at least 5% a year on data of revenue. So of revenue number, 5% is being spent on data, but there is no visibility to it because people don't manage the asset. And in some cases, it's as much as 12%. So what we're not saying is spend more and more on data. What we're saying is manage it and spend it effectively so that you get these benefits. And the benefits are real. So why is valuation so important? In order to do the valuation, we need to identify the asset. We need to identify the value, and we need to identify the value pathway. So we'll talk about that in a little bit. But what I want to do is just to talk through some other data valuation methods. There's a wonderful book that a good friend of mine, Doug Loney, wrote about infonomics, and it talks about data valuation, and he came up with a list of things. But the reality is that the long list is not fit for purpose for most organizations. It will send you down the wrong route, and it will get you back into the sticking plaster mode of trying to fix data for the analytics. In order to think about this, understanding data from a stakeholder and value perspective helps you change the paradigm. And that's what businesses need. So if you are just interested in working out the use case value of a specific piece of data, this is not the method that Anmut proposes is not the right one. But I can also guarantee you it doesn't work, because I've tried it. I've done this for many years as a consultant when I led data practices in other organizations. It doesn't work. And if it did work, the results would have been very different between the graph that we looked at before. That delta between what the CEO needs and what is being delivered would be very different. So unfortunately, these other methods don't deliver on changing and bringing that gap, closing the gap. So there are 5 methods that we talk about. The first 2 is market-driven data valuation and data set driven, and they're really the same thing. The one just goes down to a lower level of detail. So the first one, the market driven one, identifies the major data assets that you have as an organization and what the value of those assets are in relation to each other. And why that's important is to get your board talking the business language of data. In other words, translating things like lineage, governance, all that kind of stuff, which is critical, but your board doesn't really understand and will never really focus on it unless we're in a different generation. What the board does understand is value, because that's what they've been asked to look at as part of their governance charter. So the first 2 is about looking at the market value of the organization and looking what data assets support that. And the second one is therefore taking that data asset to a more granular level and linking it to the data sets. There is the ability to do narrow initiative driven ones, and sometimes we do those, but we will always link it back to something like the market driven approach. Now, the even bigger one is stakeholder. Remember, the investor, which drives the market price of the company, is but a stakeholder in the organization. And the true real value for the organization lies in understanding the different value from the different stakeholders. So not just the investor, but also the employee, the customer, the supplier, et cetera, et cetera. And we've developed very, very effective methods of helping public and private sector organizations understand the value of that. And then finally, we are working with some organizations around a better way of trading value. Organizations often ask the question, one of the first questions they ask us is, at what price can I sell the data I have? Which is a great question, but actually what you'd realize is that making use of your own data is the much more valuable thing. And once you have the data in the condition it needs to be and you understand the value for yourself, it is a lot easier to get to the trading value. So just a few examples in terms of how we do this stuff. What we do is we built neural networks, which is just a very complex statistical model that can handle very large volumes of data to analyze millions of data points around industries and companies themselves. And what we can then see is what are the key value drivers for that industry and for the company itself. And we can look at what the underlying data assets are of that organization. We have a neural network that analyzes the usage of data and links it to those value drivers. So that helps us to get to this kind of view where you can understand in the darker areas what the data assets are and what the most valuable parts of them are. And as you can see, in the case of this pharma company, it is significant. Data makes up much more than 20% to 30% of the value of the company. And that is generally true. For certain types of companies, it's much higher. For data and tech-driven companies, digital-born companies, it is obviously much higher because data is their lifeblood. But in most cases, it never goes below the 20% level. And this is an example of what we did from a stakeholder perspective. And what you'll see here is how we did the work for Highways England that takes the total economic value, splits it between physical and intangible value, and then show the value by stakeholder and the value drivers that creates the value for those stakeholders, and then identifying the data assets to that. Now, once you understand the relative value of the data assets like here, the decision making about where you place your bets becomes so much easier, and it helps you rationalize a lot of technology and data spend in the organization. So this is a quote from Devon Crowley-Sweet, the Chief Data Officer at Highways. He says, for every £2 of physical asset, we have £1 of data asset. We discovered that by valuing our data, it's given people in the business a language to manage data as a strategic asset. Now, what's really important is that this is the big breakthrough. It's understanding how you compare physical with the virtual, with the intangible. And this is what data valuation does.
Thanks, Herman, and thank you for listening. If you want to learn more about data valuation or data asset management, just get in touch through our website, www.anmut.co.uk. There you'll find all sorts of information, blogs, research, reports, insights on these topics. So if you want to make the most of your data and get the best returns from it, check it out. Thank you.